Oh man, so it's the morning after the day before equity markets and Bitcoin got a big hit, but how much lower can Bitcoin go? We're currently sitting just hovering over $20,000 at the time of speaking. What are the key levels we need to look out for? How much lower can we go? And couldn't we potentially test that low of 17,600? We're going to go through the charts. We're going to look at the key levels plus what happened and find out what my game plan is in this market. Guys, don't forget to smash the like button. Don't forget to subscribe. As always, if you want to buy any crypto, you can do so using the links below to BYBIT or BitGet. As you can see in the charts here, guys, it's been horrible. Loads of people were saying this week, oh, it's a boring week, it's a boring week. And I continue to say, wait until Friday when the PCE data comes out and Jerome Powell speaks. The market is waiting for that. And you can see Jerome Powell came out and meant business. He meant business. He came out super hawkish. If you guys haven't caught up on what he said, go watch my video from yesterday. I made a short video summarizing what he said if you missed the 45-minute long live stream where we went through it live with his comments and remarks at the same time. So you can catch up on what he said, but in essence, he came out hawkish. He came out and meant business. And the result of that, as I tweeted, was a day to forget in the markets. I mean, this was the markets yesterday. I mean, it's crazy. I mean, let's come back over here. You can see 4% almost down here on the Nasdaq, 3.94%, 4% almost on the Nasdaq. S&P wiped off 3.37, and the Dow Jones 3%. Billions and billions of dollars wiped off of the equity markets, and Bitcoin was not escaping to Bitcoin being thrown to the downside here yesterday as well. Initially, you saw a little bit of a rally going into Jerome Powell's meeting, and then you saw a small fall. It was holding up okay at this level, and then it just let rip. It fell, it consolidated, it fell, and look what we can see now, guys. A little bit of support. Look where that support came in on this hourly candlestick. It came in exactly at a horizontal support of 20,000. Okay, this is a key psychological level, this one here at 20,000. You can see that support coming in. So you're seeing a little bit of consolidation here. I think we're going to go back down to test 20,000, and most likely we will break through that, in my opinion. I'm going to show you what levels I think we could be heading to on here, because if I zoom out to the 4-hourly and I show you this, remember, we started off falling from this trend here, okay? We fell from this long-term trend. And what did I say? I said we're going to go down to pivot point 1. And pivot point 1 is from this pivot here. And you can see that holds up at about 20,600. And that's exactly where we held some support. Look at that, where my cursor is. That's exactly where we held some support. And we continued our bear flag. I continue to reiterate that this was a bear flag for this whole week, waiting for Jerome Powell. We waited for Jerome Powell, and therefore we got the break to the downside because he came out hawkish. And now you need to look to where the next support is. And I said there'll be psychological support at 20,000. That is what we're seeing now. Once we lose that, because I don't think that psychological support is too strong, we'll be heading now to the next pivot point, which is 19,200 in my opinion. That is what I'm looking out for. I'm looking out for 19,200, and more important, the bottom of the channel at 18,700. Those are two levels I'm looking out for now. 19,200, then 18,700. I've got some limit orders set for some cheaper Bitcoin DCA buys as well at those levels. So I'll be happy if it gets into those levels. More importantly, the question we now have is, will we be going down to test these lows at 17,000? And the argument is quite strong that you will. When you see a type of pattern like this, you would expect to fall to the bottom of the wedge. And you could argue that if you lose this level here at 18,700, not only could you test that, but things could get a little bit nastier to the downside as well, okay? Things could become a little bit worse to the downside, giving you lower price points. That's something for us to watch out for, because we are now back in this channel, right? If you look at the two green lines, this was a channel which we stayed in for a very long time. We got rejected, we came back out, we came back in, we went back out, and now we're finally back in. And if we fall below 20,000, we're at the bottom of the channel. We'll be precariously balancing around the bottom of the channel with support at 18,700. If we lose 18,700, not only could we test that 17,600, we could be heading even lower. And I'll set those new price targets once we do some analysis on it if we lose each of these levels. But I don't want to go calling for crazy price targets right now. I don't think that's useful. And I think also you could be taken out of context. I think it's important that we focus on what the charts are telling us right now. What the charts are telling us right now is you've got a little bit of support at 20,000. Then I'm looking to 19,200. Then I'm looking to the bottom of the channel. And then if we hit all those price levels, then I'll be thinking, okay, if we lose this channel, then not only are we testing lows, we going even lower, and then therefore what is our game plan around that? Now, an important message which I gave well before this Jerome Powell meeting when we were hovering at better prices, I was saying, guys, if you have no conviction and you're going to panic sell when you start to see 18,000, 19,000, maybe back into 17,000, you need to do yourself a favor and sell now, right? If you've got no conviction, you're going to panic sell 17,000, 18,000. If we 16,000, you're going to panic sell. Why would you not panic sell when you're at the top here at 22? Right? You can do yourself a favor. So you really need to make sure you've got conviction. I mean, I know what I'm doing. I've got conviction. I'm not going to be selling any Bitcoin. I'll be looking at opportunities to accumulate, and therefore I'm really comfortable in this market. The other things to look at here. On the 4-hourly chart, you can see huge extension to the downside. We are getting big rejection here from our EMA ribbon. In fact, let's go to a cleaner chart. And you can see the rejection happening from here. We got sent right back down powerfully. Obviously, technicals, along with the fundamentals and macros of what Jerome Powell did, gives us a big push down here to downside. If we take a look at the daily, similar, very hugely extended. As you can see, this consolidation was just that. It was just a consolidation, right? That big Friday fall, consolidation, and another big Friday fall with Jerome Powell. So things are looking pretty painful right now. The bears are in very strong control, and it's going to be very difficult to unwind that, to undo that for the time being. Now, longer term, what are we thinking? Well, longer term, this market will not switch risk on until we get evidence of Jerome Powell pivoting. Okay, so I'm expecting a lot of sideways / slightly down momentum in equity markets and therefore in Bitcoin too. Risk is going to stay off because right now the markets have just been told by Jerome Powell, I still mean business. I'm going to come out and I'm going to keep doing what I need to do. And that is why the market now, 61% of the market is pricing in a 75 basis point rate hike. Remember, the premise of the rally we saw when equity markets got excited and Bitcoin followed and looked like it was trying to break out was based on the premise that, oh, Jerome Powell had his last 75 basis point rate hike. Now we're going to go to 50. That was way too premature. CPI only showed one notch down. Now that is why I was so confident that Jerome Powell was going to come out yesterday and do what he did, which is come out and put the market back in its place and say, calm down. You are not rallying based on the fact that CPI and PC just inflected down 1 month. You've got to see consistent progress towards it coming down before we can see. So Jerome Powell continues to stay focused. Despite being in a technical recession, he's going to plow on and continue increasing interest rates into a recession, which is a brave move, but he's focused on extinguishing the eye. So we need to stay focused on the fact that, look, until he gives a sign, pivoting, maybe two CPI readings coming, inflecting down more and improving, then we can think about a U-turn. So I think we're going to get some great time here to accumulate. And the question more is, are we going to go to that 17,600 and are we going to create new lows, or are we just going to be range bound for a while? I don't think there's a scenario where we can go on a massive rally at the moment. The market's not willing to do that. I can't see a way that risk is going to turn on when Jerome Powell is saying that he's most likely going to do a high interest rate hike at the next meeting in a month's time. So that's what we're looking out for here in the market. The other thing I wanted to show you was coming across to the weekly chart. When you come across to the weekly chart and I remove the EMA ribbon, I want to bring out the 200-week moving average. Remember that important line? Now, this is what happened. It's acting like resistance, exactly as we were fearing for, right? So exactly as we were fearing for, we did not want this to act like resistance, and it's doing exactly that. Another strong red weekly candle being posted here to the downside, which is showing that not only did we close back below it, but now we're continuing our force to the downside. So this 200-week moving average acting like strong resistance to the downside, just further evidence that the bears are in such big control right now, okay? Let's also bring out the VPVR to see if we can see what's going on here. And as you can see, we've just broken through that high volume area. So now the bears are in easier territory here. It's easier for them to move the price down, which is getting a little bit worrying here on the daily chart. So you can see that for them to go and test some of these next pivot points, which is what we're saying at 19,200 and then about 18,700, I think it's become easier for the bears to push this down over the next week or so. So that's what I'm looking out for here. I also move the VPVR and I bring out the Bollinger Bands. You will see here that we've not yet closed our daily Bollinger Band below just yet. But if we do, that could show us a bigger extended move to the downside. Okay, so this is something for us to watch. And the moment you're seeing the Bollinger Bands do this little thing where it's expanding, which is obviously natural when you had such a sudden shock move to the downside. But if you close your candle below it, that could signal a big move to the downside, testing those lows at 17,600. So that's what we're looking out for there. There you have it, guys. That is the market state here on a weekend. Again, no trading for me to do here on the weekend. I mean, crazy low volumes. You want to stay away from it. More importantly, what direction do we get on Monday? That's what's going to be important to me. I've got my limit order set. If We get to these cheap prices where we suddenly fall down to about 19,000, I'll pick some up. If we get to 18,700 range, I'll nibble even harder. And if we fall below that, I'll be buying even more. If we go test those lows at 17,600, that's going to be important level as well, where we could be getting cheap Bitcoin. I'm not ruling out the fact that we could be creating a lower low here. Okay, the bears have showed really good strength. Not only did they not allow us to get a relief rally, we got a pittance of a relief rally, right? We didn't, I mean, let me just make that point actually. So let me come back onto the weekly here. Not only did so what we were looking for, remember, in this relief rally, what did I say? I said when we were here, the maximum I was looking for was, can we get a relief rally into our EMA ribbon? Is that too much to ask for? At 27, at 28, 29, in this kind of range here. Even that as a relief rally is a pittance. That's a joke, right? That's weak. I mean, if you look at this relief rally, at least you went above your EMA ribbon and then the bears took control, right? In this case, the bears didn't even let us go into our EMA ribbon. They blocked us here. Look at that. They blocked us here. So myself included, I was calling for a little bit of relief rally. I thought, look, even if the bears are super, super strong, they'll give the bulls a little bit of chance to let the pressure out, right? Release the pressure valve, go back here, and then they'll send us. Bears are in such big control. They've just done it straight from there. They rejected us straight from our 200 exponential moving average, straight to the downside here, and showing that they've got real strength. So they've definitely denied us our relief rally here, and they mean business. So I'm expecting a test of some of these lows, and particularly when you look at the on-chain metrics to show that a lot of people took this opportunity, and this was important. If you don't watch the video, I'll link it up for you guys to show you the on-chain metrics. They took this opportunity to offload their bag. The volumes were not coming in, minor fees were not coming in, exchange flows were not there. All the on-chain metrics were pointing to the fact that this was just an opportunity for people to sell, people not coming into the market, and nobody actually relief rally go back to all-time highs. Hope you guys enjoyed this video. As always, don't forget to smash up the like button and subscribe. Enjoy your Saturday wherever you are. Go watch this video here, and I'll see you in the next one.